Hello, this is Susan Geithner with the monthly market report for February of 2020, courtesy of Keeping Current Matters. Let's start with the news, as we should, and I wanted one quick slide for the possibility of recession this year. Here's an interesting stat. This is the actual percentage of economists in the Wall Street Journal survey of economists that believe that a recession is going to take place sometime in 2020 or before. Back in 2018, that number stood at 67%. 2 out of 3 economists thought that by the end of this year we'd have a recession. Going back just a couple of months, October 2019, still more than 1 out of 3 thought that we were going to have a recession at 34.2%. But in January, there was a survey that showed only 14.3% believed that we were going to have a recession this year. So we talked about the possibility of recession. We're in the largest economic recovery in the United States history. People were really thinking that that's where we were going to, but right now, economists are just pushing it back and pushing it back. The interesting thing is that one of the reasons they're pushing it back is the fact that the housing industry is doing as well as it is. As a matter of fact, here's some information from ShowingTime's latest buyer traffic report. They said that showing numbers confirmed that year over year, buyer activity has increased substantially, and it's increased every single region. The West, the South, the Northeast, and the Midwest are all seeing more buyer traffic this year than they did the same time last year, and that's been confirmed by the existing sales report by the National Association of Realtors. Again, in every region of the country, sales as compared to this time last year are up in 2 of 3. They're up double digits. If they're in the Midwest and Northeast, they're almost hitting double-digit increases. So what we're seeing is the housing market is very vibrant right now. As a matter of fact, Lawrence Yun, the chief economist at NAR, said, "We saw 2019 come to a close with the economy churning out 2.3 million jobs, mortgage rates below 4%, and housing starts start to ramp up 1.6 million on an annual basis. If these factors are sustained in 2020, we will see a notable pickup in home sales in 2020. So, what are we talking about? People want to buy houses. The millennials are out and they've reached the age that they want to purchase. Across the country now, buyer activity is very strong. As a matter of fact, from NAR's survey of realtors, we can see that in almost every single state across the country, buyers' traffic is very strong. But when we go to sellers' traffic, we see that dies off pretty dramatically. So the amount of people looking to purchase a house is increasing dramatically, but the amount of people ready to sell their house isn't reaching the same levels. That's leaving what George Raytu, senior economist at Realtor.com, said. The market is struggling with a large housing undersupply. The number of homes for sale are poised to reach historically low levels. As a matter of fact, that's what he said about 4 weeks ago, and the new numbers are in. Housing inventory is falling to historically low levels. If we take the look of number of homes for sale, it's at 1.4 million. The last time that was seen was back in 1993. The month's supply of inventory, which dropped to 3 months, it has never hit 3 months in the last 35 years, and it might actually fall below that. Bill McBride from Calculated Risk actually addressed the issue because some people say, well, it's December, it's the time of year where a lot of people take houses off the market. Inventory always decreases sharply in December as people take their homes off the market for the holidays. However, based on the data I've collected, this is Bill McBride saying this was the lowest level for inventory in the last 3 decades. The previous low was 1.43 million in December of 1993. So again, we have the lowest number of houses for sale since 1993. We here have been taking the numbers of the months of supply of inventory going all the way back to 2011. So here's a graph of inventory. Now, obviously, right after the housing crash, inventory skyrocketed. There were more and more houses coming on the market and less purchasers ready to purchase. So back between 2011 and 2012, we almost hit 10 months of inventory, but then we've been steadily going down as the market has recovered. But if you take a look at where that red dot is right now, we can see that 3 months inventory has never been hit before since 2011. Again, in the last 35 years of business, Inventory has never been this low. It's hitting every price point. This is the year-over-year inventory declines and the fact that they're accelerating. Any house under 200,000, the amount of inventory is 18.1% less than it was the same time last year. From 200 to 750,000, it's 10.2%, and from 750,000 and up, it's 4.4%. So what we're looking at is that across the board at any price, there's a lot less inventory now than there was last year. Now I know this new construction is really starting to take off, and we're happy with that, but we have to understand how far behind new construction is. Here's the number of single-family home construction starts in the single-family houses that got started to be built in each of the last several decades: the 60s, the 70s, the 80s, the 90s, the 2000s, and then the 2010s, from 2010 up till 2019. What we can see, obviously, and this is per million population, we have almost half of what's been done each of the previous 5 decades. So, not a lot of new construction over the last 10 years. And that's part of the reason we have such a shortage. Now the good news is, the sales pace on newly built single-family homes ended 2019 with a gain of 10%, increasing to a total of 681,000. This marks 2019 as the best year for new home sales since the Great Recession. So the good news is builders are starting to build. Now understand, the inventory of new home builds can help the middle move-up buyer. That middle range from a price point speaking, that move-up buyer, because they're not listing their house. Why are a lot of first-time sellers not listing their house? Because they can't find a house to move to. New construction could be the answer for them. Now people are saying, well, wait a minute. Just a year ago we were talking about inventory was building. We're finally getting inventory back and everything was going to be okay. Now all of a sudden we're at a shortage again. Probably the best explanation was from Skylar Olson, Director of Economic Research at Zillow. A year ago, a combination of government shutdown, stock market slump, and mortgage rate spike caused a long-anticipated inventory rise. That supposed boom turned out to be short-lived mirage, as buyers came back into the market and more than erased the inventory gains. As a natural reaction, the recent slowdown in home values looks like it's set to reverse back. Remember, we were talking about going almost through all of 2019 that prices were moderating. We were talking about it coming back to a normal market. Not that we were going to see depreciation, but the level of appreciation was decelerating. Instead of getting 6 or 7% year-over-year appreciation, we were looking at 3 to 3.5%. Well, it looks like that's reversing, and the prices are starting to go back up again. Here's the regional year-over-year change in price from the FHFA report. Remember, historical number for annual appreciation in residential real estate is 3.6%. We can see every single region beat that 3.6% normal appreciation, or historically normal appreciation, I should say. So prices are still very strong. If we take a look at state by state based on the FHFA report, we can still see again prices have been strong in every single state in the country. That's the FHFA. Now let's take a look at CoreLogic's year-over-year change in price. Now some of the data is a little bit different. They're looking at different sets of houses. Don't let that confuse you. The most important thing is both entities, both FHFA and CoreLogic, are seeing prices increase year over year at a greater rate than just 1 month. As a matter of fact, going forward, CoreLogic is forecasting that across the United States we're going to see 5.4%. Not that 3.5% increase we saw at the end of last year or the middle to the end of last year. But for the next 12 months, prices will go up about 5.4%, and they broke it down state by state. Each state looks very strong. The big question always is, well, do you think there's a chance prices might depreciate? If that's the case, your state would be red. All 50 states are on that map, and none of them are red. Now, let's not just look at FHFA and CoreLogic. Let's take a look at other sources that project forward. So here are some home prices projected to continue to appreciate. Home Price Expectations Survey. They do it over the next 3 years. Mortgage Bank Association, Zelman and Associates, Fannie Mae, the National Association of Realtors, and Freddie Mac. Each of them projecting the U.S. prices are going to go up each of the next 2 years, and in case of home price expectation, each of the next 3 years. So what we're going to see is that prices will continue to appreciate, and I think the acceleration numbers, the percentage of appreciation as we go through the year, should increase. Again, for what reason? We have a situation where there's not enough inventory to satisfy the buyers. Now, that could get some buyers concerned. Wait a second, everyone's buying these houses at these high prices. Remember what Dave Ramsey said, the great financial tutor. Well, if you're planning on buying a house, home prices might look intimidating, but remember, just because you saw house prices that other people in the nations are buying, that doesn't mean you should look for a house in that price range. Instead, focus on your own budget. Don't worry about the pricing trends. A good real estate agent will help you find a home that you love that's within your budget. That's what you're looking for, people. A good agent that can help you find a home within your budget. Remember that even though prices are going up, that doesn't mean the cost to you on a monthly basis is going up. Outside of home prices, there are other factors that can change your mortgage payment. Mortgage insurance requirements, the interest rate is a gigantic one. Down payment size, credit score, and debt to income ratio. The big one is interest rate. If interest rates are going down, even if prices are going up, you're still going to be in good shape. We can see that they're projecting that interest rates are going to stay under 4% for this year and next year. We expect mortgage rates to remain low for over the next 2 years, averaging 3.8% in 2020 and 2021. That's a quote from Freddie Mac. You can see what interest rates have been over the last couple of decades. Even though they're struggling at 4%, people say, well, is there any way they're going to go down to 3? Let's take a look. In the 70s, they were up over 8%. The 80s, they were over 12%. 90s, again, over 8%. And the 2000s, they were over 6%. It wasn't until 2010, after the crash, where the government came in and started adjusting interest rates in their own way to make sure that the economy kept going. Rates did drop. We're even below what they went through in the 2010s. Now, what that means is the fact that there are a lot of buyers out there, and if you're thinking about buying a house, you should definitely jump in. There's not as many listings, and that's why we have to make sure we understand one of the main reasons that that's taking place. Here's the median seller tenure in their home since 1985. How long have people stayed in their houses? We can see from the beginning all the way to 2008. Beginning when records were taken in 1985 to 2008, people stayed in their house on an average of 6 years. Exactly 6 years. But then after the crash, because some people didn't have equity, some people want to take a chance and move up. People would stay in their houses much longer. Instead of averaging 6 years staying in their house, it jumped to 9. So when building new construction wasn't taking place over the last decade, the amount of existing homes that came to the market also decreased. So what we're looking at is the fact that there's such a lack of inventory right now. So we have to help that pent-out selling demand. The people that would normally have sold already but stayed in their house to know now might be that time. Many of those people stayed because they didn't have the equity to move, and they might not know today the amount of equity that's in their home. Again, going back to Dave Ramsey, when it comes to home prices for sellers, the main question is, how much money can I make on my home sale? Well, the new numbers for 2019 just came out. Sellers realized a home price gain of $65,500 on a typical sale. This marked the highest level in the United States in over 13 years. The average homeowner, when they sold their house, walked away with $65,000. You should make sure that you should know exactly what the equity situation in your home is, because if you understand that, you might realize you have the cash to make that move, maybe into the dream house that you've always wanted. If that's the case, and you want to do that, when interest rates are still low, that's the best time. And that's what we need to do. And the good news is more and more surveys are coming out and showing this. This is a great time to sell your house. As a matter of fact, the percentage of people from NAR Home Survey and Fannie Mae Home Price Survey both agree. In one case, 3 out of 4, and the other case, 2 out of 3, agree this is the best time to sell your home. When we look at it across generations, while millennials might not know if it's a good time to sell their home, from Gen X all the way up, we can see the vast majority, in every case, more than 3 out of 4 people in Gen X Young boomers, the older boomers, the silent generation, the current homeowners think now is a good time to sell in big numbers. I'm here to help you make that decision. And let's try and get some of those obstacles out of the way. One of those obstacles as you get older is you just may not know. When you hear a 30-year mortgage and you're 60 years old, you might be thinking, well, I don't know if I could qualify now that I'm retired. And would a bank even give me a 30-year mortgage if I'm 62 years old? Retirees that no longer have a full-time job may wonder how you'll qualify. If you're a retiree and you're wondering how you may qualify with limited monthly earnings, you should know lenders are now qualifying older adults for a mortgage based on your pension, your Social Security dividends, and any interest that you're getting. Anything that's available to you. So yes, there's a very good chance that you're going to be able to get a mortgage, especially with the big down payment that you can put down because you're selling your current house. Older Americans can still get a mortgage. Borrowers over the age of 65 comprise about 10% of all mortgages that are originating each year. So yes, ladies and gentlemen, even older sellers can get a mortgage to move into the perfect house for you in your retirement. If you're interested in the resources where the statistics are coming from, here's a brief view of the resources used to compile this report. You can pause this video at any time if you'd like to be able to look at it more closely. Please be sure to check out the new Spring Buyers and Sellers Guides available to you free on my website by clicking the link on the left-hand side. Here's my website. Simply click on either the Buyer's Guide or the Seller's Guide for your free copy for your reference.